Yeah, man. So like
What do we
the
call
market is
this?
honestly, I don't know what we're gonna call this. We can just figure it out as we go.
Babuiji time.
Sure. Honestly, that's a great time. That's a great name.
Where
That's actually a
random?
great name. No one knows what it means, and it's
Yep,
just something that we came up with like years ago. I'm
yep,
down.
yep. Welcome to episode
Yeah,
0.0.00 of Babuiji time.
yeah. This is our origin stories.
Ah, yes. Ah,
Whoever is
yes.
listening like years from now.
Yep. It
Yeah,
is. It
yeah.
is. It is what it is.
Yeah, so this is our first one. I
Mm-hmm.
guess we can kind of like talk about what the whole deal of this episode is about, or just like the podcast in general is. It's gonna be more about like finances, anything that happens around the world that's kind of relevant to it. May sometimes include politics and just like some small discussions on that. Could be actually long discussions, depending on how long we want to make this.
Absolutely.
But yeah, but like honestly, man, I'm actually really looking forward to this. So yeah, let's just try to get deep into it. Let's kind of review what happened in the markets in the last like week or so. Did you
So,
notice any patterns?
um, last week it's a very very strange week. I think that obviously like both of us we monitor Nasdaq and Bitcoin pretty closely.
Yeah.
I've not been looking into. I've actually narrowed down my trading universe just down
Okay.
to Nasdaq, and I've been
Sure.
eyeing just crypto as in Bitcoin. Um,
Okay. Okay.
and honestly, the reason I've done that is well because I'm working on like releasing the indicator, like our product,
Yeah.
the
Yeah.
subscription service,
Sure.
and
Yeah.
I'm like just testing that. And at the
Right.
moment, my goal is just to show that the model is able to outperform leverage Nasdaq. So my trading universe is just that. So I've not been caught up in any news other than just Nasdaq and Bitcoin. What's been
Okay.
happening?
Okay. So just to clarify on that, so your model, you're
Hmm.
trying to see if you can outcompete the leverage versions of the Nasdaq, like TQQ and all these other ETFs. Is that what you're
Yep.
gunning for,
Just
or?
yep. My the
Okay.
idea of the indicator is just that it's an indicator you can slap onto your charts, and then
Okay.
it'll give you buy signals, sell signals, as well as pricing zones, which indicate overbought, underbought, and to what degree. And the idea is
Yeah.
that just by following the signals, you should be
Okay.
able to perform as well, if not better,
Okay.
likely better than the
Yeah.
leverage ETF itself in a
Okay.
safer manner, avoiding large drawdowns.
That's honestly like I think this is the first time we actually rehash this
Hmm.
from this angle, and I'm like surprised that your model is kind of being built to do this, right? Because there's a lot of people out there who literally have no idea what's going on in the markets. Like they just have their daytime job and they want to just work and put money in and just let the markets ride up over time. So for anyone who doesn't understand what leverage ETF is, it's basically an ETF that goes on multiples in terms of percentages on what the daily movement is. So if the Nasdaq is up like 1%, well, your leverage ETF, like DQ for example, can be 3x, right? So it goes up 3%. And the problem with this is while during times that are good, you can rip up really high, when it goes down, well, it compounds, so it goes really, really down, right? So it's really quite dangerous for people who are working in their office or at the hospital or something, which is something what I'm gonna do, and you don't have time to look at the markets when it performs like that. And we kind of seen that in April and May and even like March,
Yep.
February, January, right? With
Yeah.
like the Trump tariffs and stuff, right? There's a lot of shenanigans going there. And I think just to kind of communicate this, your model is kind of designed for the average person so that they could use it, smoothing all that volatility from outside forces, right?
Yeah. So for example, just from February, if I were to like chart the maximum drawdown, um,
Yeah.
it was 60%. So if
Okay.
you held from February up until today, you would be
Yeah.
down 60% drawdown, but I think you would
Yeah.
still end up being just 18-20% down if you had held. And
Right.
the idea of the model that we're
Right.
developing is that, well, to avoid the drawdowns,
Yeah.
to perform better than the leverage versions.
Okay.
And the main idea is, I think there are multiple schemes. So for people who are new to investing, here's some terms you might have not heard of: mean reversion, trend continuation, and breakouts. My model is hoping to capture these three signals. And what mean reversion does is that if you have a chart data, and you see the stock price is varying day by day by day, there
Yeah.
is a quote unquote true value, and the model attempts to predict what this true value is. And then it finds out through zones how far away the stock price is from this true value. And
Right.
using these bands, we're able to predict with about like a 90% accuracy on NASDAQ, um, how when to invest and how likely is it to reach the mean. And that is the mean reversion strategy. The other strategy is trend continuation. When you're moving in an upward direction or a downward direction, when is it safe to invest? And that is something that the model also shows, just through a different color signal. And then lastly, it's the breakout. That's currently on the more experimental side, but the idea is that when it's great or when it's really bad. Well, let's just assume you're a long trader. So when things are good and it's really good for some particular reason, oh, the GDP is going to be up. Oh, the tariffs were canceled, and everyone's saying, "Hooray! It's time to put money back in." And this is the third type of signal the model aims to capture and recommends that you buy. And
Yeah. Like.
mhm.
Yeah. Go on. Go
Now,
on.
I was gonna
I
say,
think.
like, the idea is that if we can combine these three strategies together, we're able to minimize our losses in the market. Obviously, there are always going to be losses, um,
Yeah.
and try to capture as much of the profits as we can.
Yeah, yeah, exactly. So, I think there's a lot of, like, jargon in being used, right? So it'll take some time for us to kind of get everyone acquainted to how we kind of discuss this. But essentially, the model is designed to help incorporate things that you would be too busy trying to figure out, right?
Hmm.
There are certain things that are hard to understand, like, interest rates, inflation, unemployment, GDP. Like, for most people, what is GDP? They don't know what that is, right?
I'm sure they
Um,
do. There's no way. No way
I
MBA
mean,
education is that bad. There's no way. I refuse to
you
believe it.
you'd be okay. Honestly, you'd be surprised. Like, I asked people how to calculate the averages, and
Hmm.
they're having a hard time doing that. I would not be surprised if it takes a little bit of learning to understand what that term means. But just in general, going back to the model, it is designed to help make it very user friendly. Everything is, like, I think, in different colors and stuff, and it basically communicates to you when you buy and when you sell. It's just press button when it tells you to, right? It's pretty straightforward. All the explanations and all the kind of the data is kind of designed by Kay, right?
Hmm.
So it makes it very easy. Now, what it can't guarantee, though, is how far the drawdowns will be, right?
Hmm.
At
No,
the
it
end of
cannot.
the day, for traders, they recognize that it's not how much money you make that's important, and that's still pretty important. It's how much money you avoid losing when shit gets really bad. And for anyone that's held their equities or bonds or whatever, during April, May and March, like around spring, everything fell, right? Everything fell. The USD fell. The Canadian dollar also kind of fell. Everything fell. So it's kind of hard to hide when everything is exposed. I think the only thing that was doing best than everything else was cash, like straight up cash, and even cash was being, like, eroded, right, due to just exchange rate losses and inflation,
Hmm.
right? So So there's a lot of complexity here that you can't obviously control, and the model tries its best to square the circle, but you can't control everything. And I think the biggest psychological like obstacle for most people, investors per se, is that they see red and they panic and they just cut their losses. You don't try to do that, especially if you're planning to hold these things for a long, long time, for like decades.
I have a fun story for you guys. So
Sure.
the way I started investing is because, well, I have this friend. I'm gonna call him RD, and he a long time ago he was long a fan of the GME and the AMC shorting well that debacle. So
Yeah.
I had bought a lot of AMC at the time, and my God, my ego was destroyed when I did not sell at the peak. Absolute ego destruction, absolute
Yeah.
pain and hurt, and I still remember it as bright as day. Do you
Yeah. Honestly, just
were you part of
huh?
this? Were you part of this? Were you
No,
also no?
dude. I'm not that like okay. I got onto it after the GME stuff started breaking off. Like
Mm-hmm.
I got my first like real job working at an internship, and I got my first paycheck, right? So when you're when you're a student, your parents is kind of like covering some of your food and your housing and stuff, and you don't have to like use your money to spend it on any of these basic necessities. You ask yourself, what do you do with a $3,000 paycheck, right?
Mm-hmm.
Every like 2 and I've always like had a passion in economics and finances, so I decided to get involved in investing. Um, right around I think 2021. So like December, September 2021. So that's where the market really peaked
Mm-hmm.
after the COVID pandemic happened, right? And markets really were exuberant, and lo and behold, that was the worst time to invest because
Yeah,
I literally bought the peak, right?
yeah, you
Like
bought the
inflation
peak.
was like yeah, like inflation was like a 9% at that point. And because I was still new at this, I didn't know what 9% meant, right?
Disaster.
Or what right? Or what inflation meant when it kept going up and how the markets react to that. And the markets don't react to that very kindly. And around January to June of 2022, you could literally see like the markets just tilt and just go down, and everyone ate their losses. Gold was down, equity was down, everything was down because at that point in time, I at least I didn't recognize when interest rates go up, well, stocks go down. That's just how it is, right?
Yep.
It's definitely it was a big punch in the gut and in the face and anywhere that matters. But it did teach me a very important lesson on how to handle this because you really do have to always consistently keep yourself informed because sometimes some certain data may matter and then it doesn't, right?
Mm-hmm.
Like it took me a while to realize that while inflation was super important for 2022, 2023 was less important because by then it was more in control and the markets was less panicky and jittery over something like that. And I think that there's a lot of like perma porn on Twitter, right?
Yep.
Right.
And Reddit. Don't forget
And
that. Wall Street bets.
yeah, yeah, and all they do is basically say the world's ending when one data print isn't going well, which
Yep.
is kind of like retarded, right? So there's a lot of like there's a lot of fear and there's a lot of nonsense that goes on the internet, and for experienced traders like people who've actually had to survive through these ordeals over and over again, they they learn to filter some of the noise. Well, most of the noise, right?
Mm-hmm.
And the best way to really do that is to use a system-based approach, which is getting a model or getting something that is reliable to really filter out all the fear mongering, and all the like the bull mongering too, right? There are people who will be like the market goes up forever, it will never go down, or there are people who will say it will always go down, never goes up. It's the truth is always somewhere in between,
Mm-hmm.
and it's important for I think the newest traders to recognize that, especially when they have no idea what's happening.
I mean, ultimately, like, despite whatever, I think whatever you trade, I think you should be sure what fundamental direction it's taking. So I
Yeah.
think for the newer traders, there are two terms: fundamental and technical.
Right.
Fundamental talks about the entire industry, or perhaps a single equity like Apple. It's talking about the long term value, the value that comes from their actual profits and losses and revenues and operating costs. These are all like fundamental analysis indicators. But really what fundamental is, well, is Apple going to be around in 10, 15 years, and are they going to be doing better than they are now? And I think most people can probably say, yeah, Apple's going to be around in 10 years from now, 15 years from now, 20 maybe, maybe not, but I think it's a pretty safe bet. And so I think you would then consider Apple to be a fundamentally long stock. I think in that sense, whatever you invest in, I think it's preferred, unless you're one of those higher risk investors, that you should be fundamentally long or fundamentally short, depending on your investing direction, in
Yeah.
whatever you invest in.
Yeah.
And
No. No. Yeah. Yeah.
Uh,
Keep going.
no, that's what I was
Yeah.
saying. Like that's why I value the Nasdaq so much. And I think like here's
Mhm.
another truth is that most traders are going to not outperform the indices, Nasdaq, S&P
Mhm.
500, or even like the Dow. It's just that so as opposed to trying to beat the Nasdaq on your first try, maybe it's just better to follow along the Nasdaq and try your best to make informed decisions. That's just been like my thought process through whatever I invest in. I think I'm always long Nasdaq. I'm always not necessarily always long Bitcoin, but I am generally long on Bitcoin, and I think that's been I think both yours and mine overall investing fundamental idea, right, Kevin?
Yeah. Yeah. It's basically like logging risk on assets, right? Like assets that are essentially risky based on what the average person is looking at, right? Like if you ask your parents or my parents, they think gold is the one all be all, the thing to put their cash in. Is that
Mm.
or real estate? If you're living in Canada, every like boomer is basically saying, put your capital
Yeah, buy
in
more houses.
real estate and gold. But the
Yep.
problem is that when you are in your 20s and 30s or whatever, like us, right?
Mm.
That's not practical because your career is kind of slowly getting off right now. You're probably still in education. You're probably still like upscaling in your skill set. So you don't have that lucrative salary to really allocate the capital. So you can't really buy a block or an ounce of gold when it's in the four digits already, when it wasn't like this like 30, 40 years ago, right? Or your average suburban home is $1.5 million or $2 million. It wasn't like that 20 years ago.
Mm-hmm.
And if you ask the average person there, hey, what's your minimum wage paycheck? It's like $15. The
Yeah.
$15 went up probably from like 12 or even $10. I'm just giving you a ballpark, right? Not
Mm-hmm.
necessarily true.
Yeah.
But that's a $5 increase. Like a relative increase compared to the minimum wage, right? But it's completely outgrown by the assets that are in the investing world. So real estate went up by 100%, 200%, 300%, right? And that accounts for 2008 financial crisis too. So
Yeah.
even despite that,
Yeah.
the markets still really ballooned up, and gold did the same. So you can't really rely on wages anymore to survive,
Mm.
right? And unfortunately, you can kind of see that being reflected in the political system right now because there's a lot of people who are angry and who don't know how to play the system. Well, this is how you play the system. You need to literally have a model to tell you what to do, or you just understand you got to buy like equities such as Nasdaq stocks or Bitcoin or whatever, right? And to those who are new to this, Bitcoin sounds really stupid, right? Like what is Bitcoin, right? Bitcoin is basically an electronic token that can only exist as long as the internet is alive, as long as there's electricity. If there's like a global solar flare or something,
Yep.
it's not going to exist anymore, right? That
Well,
includes.
that's arguable, but yeah.
Well, yeah, it's arguable, right? But like, if I ask you right now,
Mm-hmm.
um, is gold more practical than Bitcoin? I think you and I would probably agree you
Yeah.
could do more with like you can do more with gold than with Bitcoin,
Yeah.
right? So most people look at this and they think it's a scam. It's a Ponzi scheme, right? And honestly, that's not a bad argument to make. But the fact of the matter is that if you look at the markets, if you look at risk assets like Bitcoin, it's literally moving in tandem with the major indexes. So it hasn't gone to zero. Anytime it goes, through a really bad drawdown, it literally 100% afterwards, like quite in the bit, right? So until something really pops, treat Bitcoin more like a store of value, a modern store of value, than just a scam token like all the other altcoins or shitcoins that exist online, right? It's different, and I'm not even shilling it. Like I'm not shilling Bitcoin. I know this sounds like I'm shilling Bitcoin. I don't actually own Bitcoin.
No, no,
I
no.
I trade equities that are in alignment with cryptocurrencies, right? Because I don't have six figures to just like
Buy a
store
single
in.
coin, yeah.
Yeah, exactly. Like,
Yeah,
it's ridiculous,
yeah.
right? So there are ETFs that move in tandem with Bitcoin
Hmm.
day to day. So those are some of the tickers that I encourage listeners to really search up and explore, because if you don't allocate some of your capital into these ETFs, you are underperforming the market, unfortunately. And there's a lot of big financial institutions now that are stubbornly, but clearly moving in the direction of advising their clients to put their money into Ethereum ETFs or Bitcoin ETFs. And it's usually those two
Hmm.
ETFs. It's not like the other junk like Dogecoin or like Fartcoin or something. Although I recommend looking at Fartcoin just because it's a super hilarious how it goes up by 1,000% in the last, I don't know, so and so years.
Yep,
And there are people who actually buy this junk,
yep.
right? There's also Trump coin too. I don't recommend buying that. That sounds like one way ticket to poverty. But there's a lot of stuff out there.
Dude,
But
politics,
if
if we get started on politics, we'll
yeah,
be here the entire night.
yeah, honestly, yeah, yeah. But like trying to not get into it. Yeah, like things have just been really really bullish.
Hmm.
Since the recent announcements of like the tariff hiatus, and the talks with China, right? Trump has been talking about how they want to pause the tariffs because they want to have a discussion with China, and they lowered it from 145%, which is a ridiculous number, to
Yep,
something more
yep,
feasible, like 30%,
yep.
right? And honestly, like it's kind of crazy if you think about how ridiculous this sounds, because 5 years ago, if you told me right now, oh, like markets are bullish because we raised Chinese like tariffs to like 30% or something,
That would
I wouldn't
be
believe you.
that'd be a crazy thing to hear.
Yeah,
Yeah,
exactly, right,
yeah. You don't
right.
expect that to be a net positive for the market. Not at all.
Yeah, exactly, right, exactly. But guess what? We hit bullish trend on the markets because we went down to 30% instead of that 145% number, which is again like
I mean,
stupid.
now you think about it, you kind of wonder, was it planned all along? Because I mean, it was like a small shock, yes, but if you look at the markets today versus like the actual fall from February, it's only suffering by. Let's check the Nasdaq future. Let me check that very quickly at the moment. I have the charts open. It's only like a
Yeah,
5% difference, 4 or 5% difference. So we're
yeah.
not that far from the peak, the local peak.
Yeah, we're not that far. Yeah, if you look at QQQ, which is like the ETF that we look at as a Nasdaq proxy, because you can't trade the Nasdaq, you trade the QQQ. Just
Yeah,
saying this for people who are comfortable with this. And yeah, you are absolutely right. Right, like we are very close to hitting all time highs, like 5% away. So in my mind, like I think about two things. I think about, is the market like exuberant right now? Is it on euphoria because they really think these talks are going to mean anything? Or is it a rug pull? Like, is this just a giant bear market rally that happened to hit bullish trend, and as soon as things turn sour, we're going to go back down,
yeah.
right? And I think that the second one is probably more feasible, because you're talking about an administration that is, not gonna lie, pretty grossly incompetent in how they communicate to the markets. And their job right now, they promised the markets that they'll deliver 185 trade agreements within 90 days. And like I think we're past the 45-day like halftime already. So
Oh.
I don't know. I don't know how you can negotiate, nearly 200 countries worth of deals with the most elite team, right? You can say what you want about Donald Trump. You can say that he's a art of the deal, like master negotiator or something. Are you
Master
telling me?
negotiator.
Okay, are you telling me a master negotiator can literally sit down and within 90 days hammer out 185 trade deals? You're telling me that this guy is doing 2 trade deals a day. 2 trade deals a day, okay, on average, 2.5 actually, all right, 2.5 or something, and he's gonna just hammer it all out, and everything's gonna be fine, right? Or if he doesn't do it, his master team will do it. Like someone will do this. It's
Okay,
just not feasible.
so you see, like back a while ago, I was convinced that Trump was just like the front man, and there was like a
Yeah,
team behind him that was actually competent, and like a full on trained experts, everything.
yeah.
But the more and more I watch this man do things, I'm more and more convinced that he doesn't. He might have a team, but he doesn't always listen to them. I get that feeling.
No, I
I
don't
feel
think he
like
does.
he does not. He just goes on his whim. He has an idea, just says
Yeah.
something, hoping they achieve a certain effect, and hit or miss. Hit or miss.
Yeah, yeah. See, the thing is that like if you read some of his team's theses,
Hmm.
the one that I recommend is Scott Bessent's paper. I think if you search up like Hudson Bay Scott Bessent's like thesis, you'll find out what it is,
Hmm.
and it's essentially it's a play by play rule book on what he's doing right now,
With the tariffs, right?
and yeah, with the terrorists and how to rebalance the global trading system. And I agree with his theories, right? The
Hmm.
problem is that he's not the one in control.
Yeah.
Um,
Yeah.
right? He's not the one running social like True Social,
Yeah.
unfortunately.
Unfortunate.
And
Open market
yeah, like
manipulation, but it's okay. We won't talk about that.
yeah, exactly, right? So there's just like a lot of stuff that's going on, and unfortunately, there are people who are competent in the team, but they can't really convince their boss to follow them when everyone in that team shares contradictory like views. Like
Also, as also we
yeah,
had this like discussion not too long ago, and it was like a very good discussion. I think ultimately we said like the policies that the administration has done so far, like if you really think about them, they're not necessarily as bad. I agree, some of them can be bad, but the reason why they look as bad and as crazy and like reckless is because of the way that the things are done.
yeah, that's right. Yeah,
Previous presidents or just any world leader, there's like a certain etiquette that happens in the world. Like for example, if you want to tariff someone, you do the classic politician handshake of like, oh no, we're not doing so well with this country. We're going to have to add some tariffs. And the other country goes, oh please, sir, we can negotiate this. And there's like a year and a half of negotiations, and then after that's like a 5-10% tariff, which scales
yeah,
up like every couple of few years. Right.
right.
That's like
Yeah,
the social way, the political way of getting stuff done. There's like kind of like a giving face. That's just really it. You're just giving face to your other country when you do like things that might harm them. Um, but no, here's just point and blank, direct. You are getting hit with
yeah.
100% tariffs, effective today.
Like
Have fun.
yeah. Like by Wednesday, right? Like call me tomorrow.
Yep. Call me tomorrow, or you're hit with 30% tariffs starting next Monday or 2 weeks from now, a week from now.
It's actually ridiculous, right? And the problem with what he's doing is that he's introducing like regulatory uncertainty, which is essentially you're telling small business, oh, by the way, now you see me, now you don't, but now you see me now. Like at some point, the small business owners who don't have as much capital, they can't hire lawyers like on the fly to evaluate policy and to evaluate tariff shipping policy, right?
Yep.
Those things change And if they change like by the day, by the hour, by the second, and by the Truth Social post, you have a hard time hiring people, and you have a hard time investing long term, even within the United States, right?
Yeah.
Like, I understand what he's trying to do. He's trying to basically scare people into just flying their capital into the U.S.
Mm-hmm.
The problem is that even the people who are inside the country don't feel safe because they don't know whether or not they can source products from overseas in order to run their business. Right? That's not something that is working right now. And I think he sees that. Whether or not he's going to do something about it, I'm not sure. He recently just promised to double the steel tariffs on Canada and all the other countries from 25 to 50%. So I don't think he understands what's happening here.
I mean, there are two takes here, right? One take here is he understands, and it's like it's something that's like a short term cost because I. So here's like the intention. The intention is, yeah, you add all these tariffs. The main incentive is to bring production back to America, and then 10 years from now, 15 years from now, even maybe 5 years from now, things fix themselves because you have more production happening here. There may be more development, more factories, etc. Right, and like things go back to think as they were. And the second direction is, well, the short term impact is pretty abrupt, and the unfortunate reality is that at the end of the day, it doesn't matter what happens. All the costs are going to be taken by the consumers. It's not the producers who ever take to burden all the costs. Of course, like unless they get bankrupted, that's a different story altogether. But if the idea is if they survive and if they continue their business, then all this cost is ending up nowhere but back in the consumer, the everyday user, and
Yeah,
that's the hardest part.
yeah, no, that's a really accurate assessment of what's happening right now,
But I know, funny
right?
thing. Sorry, I
Mhm.
just cut you off. And the funny thing is,
Yeah, that's fine.
like, I think like a lot of people in America are really happy that Trump is in power. And I don't think it's because of the financials. I don't think so. I think it's just because of the whole mindset, the whole mindset
Yeah,
of like showing force and like this
that's right.
brashness and this idea of we are taking over. We want America to be great again, and this just empowering movement. But I don't know. I don't know.
Yeah, no, I definitely agree with you on that. The American electorate, unfortunately, not all of them, right? It's bad to generalize, but
Yeah, it is bad to generalize. Yeah.
in, in some cases, it is important for you to generalize because this is how the country is behaving right now. The American electorate has chosen to prioritize hype and showmanship over substance, right? You can argue that his policies have good intentions. They want to bring factories back. They want to bring back manufacturing. They want to reindustrialize the Midwest because it's been ruined from companies outsourcing because of corporate greed. Those are all reasonable intentions. The problem is that he's using a sledgehammer to complete this surgery, and and this is a condition that has been taking place for over 30-40 years now, and you can't use a hammer on every single small detail. You got to use a scalpel, and he's chosen to not do that because it takes time, it takes precision,
Yeah.
and it takes like real negotiation. And when I mean real negotiation, I don't mean just forcing someone to agree to your demands and you're giving them 48 hours. You can't do that. That's not how you run policy. Now, if you noticed recently, and I don't blame you if you've not been keeping up with this up and down tariff policies, he 2 weeks ago promised to raise EU tariffs, tariffs on EU products by 50%. And then 2 days afterwards, or the day afterwards, I don't even remember at this point. Um, he said that the leader of the EU gave him a call and begged him for an extension, and he extended it. I'll be honest with you, I don't think that's a believable claim, because
Yeah.
because what I think is happening here is something I think most macro like enthusiasts would notice, and it's that Trump is starting to prioritize markets over actual policy making.
Mm-hmm.
If he recognizes that his announcements are bearish for the markets, he'll always say something to rewind it and push the markets higher. Now, I don't know if he's doing it because he tells his buddies before he tanks the markets, oh, hey, I'm going to say this, and then he gets his friends to buy it or something.
Yeah.
But that's what's been happening, right? Like, don't forget the reason why the market has re-entered bullish trend was because he kept saying bullish things.
Yeah.
He says, oh, we're going to negotiate with all the countries in the world, give them 90 days to figure this out. We're going to talk with China and solve the fentanyl crisis or something like that, right?
That's the scapegoat
Um,
for everything these days.
yeah, fentanyl.
Yep.
Everything is regarding fentanyl.
Yep.
Even Canadians. Canadians apparently
We're
ship more
fentanyl.
fentanyl.
Yeah, yep. We are all
Yeah,
high on fentanyl all the time. That's true. Isn't that right?
exactly.
Yep.
Exactly. We're all high on fentanyl, and we're gonna give it to Americans,
Yep.
right?
Right.
So
Yep. Very
yeah,
believable.
yeah, exactly. Yeah, right. So he hasn't actually done anything to permanently damage markets, which is really funny because if you told me this like 3 months ago when he was destroying us,
I would
and,
not believe it.
and I personally would not believe it. I would have thought that because he's survived the assassination, he thought that God placed him into the presidency to save America from internal destruction or something. I genuinely believe that he still thinks this way. It's just that he knows that he's going to lose the midterm elections or something along that line if markets really do enter into a bear market correction. So I think markets are are losing faith on how aggressive his tariffs are because his steel tariffs were announced 2 days ago,
Mm-hmm.
and the first thing that markets did when they opened Monday was go up. Right?
Yeah, yeah,
Like
yep.
that that literally sounds like the market version of Boy Who Cried Wolf. Like you cried so often, you cried so many times now that the wolf is just like invisible. Like no one believes you. Like no one believes you anymore. And I think that he's losing credibility because when he first came in, he did have credibility. He promised to rebuild and reinvent everything, but things have been changed. Things have gotten worse.
Let's not forget when he came in, it was like the one of the biggest bull runs of 2024.
Oh yeah.
Straight up
Oh
in
yeah.
literally
Yeah.
every asset class for an entire
Yeah.
month and a half, even until January.
Exactly. He had a lot of political capital. Like he had a lot of market support. He had a lot of political support from the people and from the government because he controls three branches now, right? So
Mm.
you can't fuck this up. Like you could not fuck this up. And unfortunately, he somehow found a way to piss away a lot of the capital. And while we haven't seen that being reflected a lot in the midterm elections because it's not 2026 yet, we haven't really clearly seen it in the polls either, even though the polls have somewhat changed since his election. You do see how markets have responded to him. They're not taking him as seriously anymore
I mean, they
because they
will.
think
They will. They will.
they will.
They will.
Okay, I think they will if they actually see genuine damage to the economy.
Yeah.
Like there's a print of minus 1%, 2% on the GDP print. I think if that happens, I think markets will start crying. But we haven't seen that yet. And until we do, I think markets are gonna call him on his bluff and think that he's basically bullshitting. And that he's gonna back up the markets when the market starts experiencing real pain.
I mean, the real test is just in a month, right? Just the China tariffs. It's good.
Oh
They got
yeah,
delayed to July 1st. Let's see what actually happens.
yeah, absolutely. I think that if the tariffs get extended again, it really will confirm this theory that he's full of shit.
I mean, let's not
Like,
forget also like right up until was it like February 20th or something, like
yeah,
the day that the actual tariffs hit, the market was green. Like nobody thought that he was gonna actually launch the tariffs. Like everything was still going bullish, bull, 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 bull. Tariffs
They
launched, and then it's literally I think 24th Friday or 21st Friday, February.
yeah.
From
Yeah.
that day onward, this has been downhill.
Yeah. They thought he was bluffing, but when he first got elected, because in the first Trump administration, he was really good for markets. Like markets would pull the stocks go up kind of thing
Mm-hmm.
when he was in power because he was a billionaire, big business guy. He had friends that were also very very wealthy. So I'm pretty sure he had the best interest to basically inflate the markets as best as he can. And anytime he did something to make the markets go down, he would find a way to pump it back up. And we kind of lost that on him over the last 6 months or so until recently.
Mm-hmm.
And I think it's back. Like the markets believe him that he's like a backstopper for any downturn the market may experience, but they genuinely are starting to lose faith that he's going to do something really damaging. Um,
Honestly, I
and
could go either way. I feel like I don't know. I think I definitely see him putting the
yeah,
July 1st tariffs, and there's also a world where he just doesn't. So I don't know.
yeah. You don't know what he's capable of doing. Like he may actually extend it and then cancel the extension. Like
Yeah,
who am I to basically predict what
yeah,
he's doing, right?
yeah.
And that actually adds the extra level of difficulty
Uncertainty.
that did not exist in the last 4 to 5 years of trading. Even in the worst of times in the last couple of years, you knew what you were getting. Like you knew that inflation was bad or economic data was bad. It was bad, and there was like no way to kind of look around it, unless you really tried inhaling copium, uh, for whatever reason, right? But like now, you can be having a great time because he extended the deadlines on China and EU, but then he could just as easily say, "Oh, by the way, they just did something to me and they made me angry, so I'm gonna like cancel the deadlines or
Yeah,
cancel the extensions."
yeah. Effective
Right? He could
immediately.
he could say that, and there's nothing you can do, especially if it's on the weekend. Like you are absolutely cooked, right?
Yep, yep,
Right?
yep, yep.
So there's a lot of like nonsense that goes on, and that actually it actually makes me want to move on to a story that I recently heard about.
Hmm.
Have you been checking X lately on Twitter financials?
I have not.
Okay, well, let me tell you this story. This one's pretty funny.
Okay.
So there is this guy named James Wynn.
Hmm.
He's like a Bitcoin cryptocurrency trading whale,
Hmm.
and he put a 40x leverage bet on Bitcoin,
Yeah.
and his liquidation level, so the level that he loses everything, is 104k.
Okay. And let me guess, it hit 104K exactly, didn't it?
Yeah. He
Yeah.
got liquidated. he got liquidated.
Yeah.
So let me tell you how ridiculous his position was. Okay. I don't remember exactly how much his position is, but he lost 100 million in the liquidation, and his leverage notional value, so the value that he was levered up to, was over a billion.
Damn. Damn.
That's wild, isn't it?
Yeah. Yeah.
Yeah. So imagine Bitcoin is like 2% from all time highs, and you get liquidated. Like his bullish trend, two
How
percent all time
stupid
high.
was that bet? Isn't that a crazy bet?
Well, here's the stupider thing. He proceeded to add a 35x and I think 20x exposure on Bitcoin and Ethereum positions respectively after that liquidation.
Wow.
Yeah, I think he did this either today or yesterday. I don't remember. And to be
Wow.
honest with you, I don't really keep up with this shit. But it was quite ridiculous on how this guy was trading, and it was by far one of the most stupidest things I've ever seen in trading. Like this is like worse than probably FTX with Sam Bankman fraud. If you yeah
Yeah.
yeah
Yeah.
like
Yeah.
there's just a lot of degenerates out there. And if you go to his Twitter account, he calls himself a ultra like degenerate or something.
Nice.
And
That
he
that
says
that
don't.
deserved. Yep.
He also says don't copy my trades.
No, I don't think I will. I don't think I will.
I don't think I will either. I don't think I will either. But that has been a very funny story that's been happening, and everyone's been talking about it in the FinTwit world, just because he's a very famous crypto trader. In fact, I think he put like 10K or something into the cryptocurrency Pepe. You know
Hmm.
that fraud,
Yeah, yeah.
right? He put it in there, and I think he made 2-digit millions pumping that market, and he sold off. And he made really good calls on these things. And he developed credibility in the Twitter space. But I don't know if he's going to continue maintaining that reputation. Just because, how do you come back from $100 million loss? Like that's just stupid.
I don't know. I don't know. I mean, like it seems to me that he's just a educated gambler. So he's doing a great job making his money. So maybe he'll have enough quality gambles to pull
Yeah,
back pull back to
that's right.
where he started.
Yeah, yeah, yeah. Just everyone, just don't do this, okay? Like,
I mean,
I know,
yeah. Go ahead.
I know the average person doesn't have $100 million to throw around, but don't do this. Don't lever 40x so that if you go down by 2%, you lose everything. It's just not a good idea.
I mean, I've been doing a lot of back testing, so I can tell you this with confidence. Even
Sure.
just trading the normal unleveraged Nasdaq S&P 500
Yeah.
or the individual equities that form the bases, like Nvidia or
Sure.
Apple or Palantir, for example. Like within just that market, within a year, there are easily 10 to 12 opportunities to 1.5x or double your money in
Yeah.
just like a
No.
3 month to a 1 month trading pool. And
I
if
I
you
can
ever
agree more.
yeah, and if you ever trade like leverage ETFs, honestly, with I can go through my trading universe of like about 70 stocks. I can identify in a week an opportunity to double your money. So
Yeah.
there's not a rush. Don't be in a rush for ultra short term profits and gamble on crypto. Just try to stay true to your strategy and take it slower.
Absolutely.
Take it slower.
I I absolutely agree. I think that, you know, take your time, right? Most of us won't die by like next year, okay? And for those who will, this podcast is not meant for you. I'm sorry.
Oh no.
I'm kidding. I'm kidding. But yeah, like be patient, right?
Hmm.
At the end of the day, you're not gonna live for like a couple days, right? You have a whole life ahead of you, especially when you're starting this young. And if you have like a job that you're working at, it's and there's a lot of ample opportunity for you to just contribute into the portfolio. And if you have a system such as this one to use, you can definitely compound your assets.
Hmm.
And within a reasonable within a reasonable amount of time, you can definitely retire early,
Absolutely.
right?
The keyword
For
is
those
compound. The keyword is
compound,
compound.
yeah, yeah, like starts with letter C, right? So if you wanna Google that in case you're not sure, by all means. But essentially, what that term basically means is you ride the wave, and the wave gets bigger, and it gets bigger much more easily as you put more time into the markets. And it won't be long, as long as you stay diligent, that things will turn out well for you, right?
Hmm.
um, we recognize that we don't want to retire at 65, right? If you want to do it the old fashioned way, you can retire by 65, you can even retire by like 50. But will you be able to live the lifestyle that you want at 50 or 65 for the next like 20 so years until you die? I don't think so.
Yeah.
Right? Things are just going to get more expensive. If the moment you start liquidating your assets at whatever age you start to retire, well, you're going to have to ration that and divide it by how many years you expect yourself to live.
Yeah.
Right?
Yeah.
And,
Yeah. Yeah.
and yeah, and if you're saying, hey, I have $100,000 in my retirement account, or I have 500,000, even if it's a million, I can't not guarantee you that you will have the quality of life that you want for the next 20, 30 years, especially when you get sicker and when you get older. and you start spending money on your health and on all other sorts of resources, right?
Mm-hmm.
So it is important that you keep that in mind and try to build above and beyond that so that by the time you actually retire, you retire early and you have enough years to actually live the life that you want. And for the last, 4 to 5 years of doing this, this is what I've always wanted, and I think this is what Kay has always wanted, right? Like you don't want to slave away for someone until you're about to die. That's just that's just not how we want to do things. Um,
And here's like some more sagely advice. I was actually talking with RD about this, and we were like just doing like a bunch of just fun math. And the fun math we showed was that if RD could save just $10,000 more per year, he'd be a millionaire 5 years sooner than what he would have been if he hadn't saved. Just 10,000 a year within like 7 to 10 years can easily
yeah,
make you a millionaire if you can save that
yeah,
much per month or per year on top of whatever you normally make. And if you're
yeah.
younger, just don't worry about it for now. Don't worry, eventually you'll be making a pretty decent job. And honestly, these days, most of the money comes not from your primary income. Well, it shouldn't come from your primary income. It should be coming from investment. And eventually you would probably get to a point where your investment income will probably exceed your primary income.
It should. It should. If you're doing everything right, you should. Um, this podcast isn't meant to give you life advice, right? We're not trying to tell you what to do, but when you're young, do try to be mindful of how you put your money in because you don't have infinite amount. I wish we had infinite amount, but we don't.
Mm-hmm.
So put more into your equities if you can't for whatever reason. Let's say you gotta buy food, you gotta pay for rent, then that's more important, definitely more important, right?
Mm-hmm.
The market is not the god altar where you basically put all your blood, sweat, and tears into it and then you neglect everything. That's not how it works.
Mm-hmm.
And we don't like recommend doing this to begin with.
Mm-hmm.
Enjoy your life the way you want, but be mindful because all of us, especially if you're starting when you literally just turned 20, you have realistically like 40, maybe 45 years to do this,
Mm-hmm.
right? And unless you're willing to work beyond the legal retirement age, which is cool and all, but if you don't feel like doing that or you physically can't, you only have 40, 45 years. And if you want to actually enjoy your retirement, able bodied, with less likelihood of being disabled because of age and sickness, then you may want to be more focused on how to order your finances in the way that you want. It's easier said than done, obviously, just because like we live in Canada. At least I don't
Yeah.
know what the listeners
Yeah.
are
Yeah.
like where they live in, but we live in Canada, and Canada is not an easy place to live anymore, especially when you're young.
It's not.
Like housing is super expensive. Everything is expensive. I stopped buying like blueberries and just like fruits and stuff because I see a carton is like $6.
Yeah, it's ridiculous.
So yeah, like it's honestly it sounds like first world problem, or even saying it sounds like a privileged problem to have, especially when there are people out there who don't even have the chance to go to a grocery market because they live in a food desert or something.
Mm-hmm.
But the fact of the matter is that I was able to have access to this in ample amount and not have to be worried about my wallet until recently, until the last like couple of years. So I can imagine what it is like for people to struggle to even like stay alive because their resources and finances are strained to the string. So yeah, we really do hope that a podcast like this can provide information because we want people to become armed with this information so they can do what they want with it, right? You may not necessarily make the same decisions as we would with this information, but we wanted to get this out there so the average person can understand this.
Yeah.
I know for a fact that our school education doesn't teach us this. This is something that we both had to learn independently through our own resources and through our own research.
Mm-hmm.
We didn't get our teachers to teach us this because they were never paid to do so, and even if they taught us finances, it's not to this level
It's
because
not, yeah.
yeah, because I'm not sure about what you think, Kay, but I don't believe that the powers that be want us to be this informed because
I yeah. No, I have to
they
agree
want
with
us
that
to basically
completely.
work.
Hmm.
They want us to work and grow their GDP, but they don't want us to be the person who actually enjoys the fruit of the GDP, unfortunately.
I have two takes on this. I think my second take is like quite a bit of a political take. The first take is like, so I come from a mathematical background. Not a lot of my math didn't initially in my earlier studies did not involve any financial mathematics, and now that I am finally interested in financial mathematics and developing models and etc., I'm finding that the knowledge to even learn how to like do some of the stuff that I do is so highly valued and so highly gate kept. It's really surprising. So for those who may not know, the term is quantitative finance. It's the most desired academic, I would say, in the market today. I think quant is someone who is typically well a champion winner. They're like international math and coding champions, computer science championships, and all of these people typically are like winners of these tournaments, and they're very immensely gifted people. And these people are the people who work for a lot of the large corporations today, the hedge funds, the quant funds, the so on and so forth. And this is where, they get paid probably a million a year just to make financial models that they do and make immense profits from it. But for a average person to be able to even get to this level, it just feels like the barrier to entry is so damn high. Even at the master's PhD level, unless you're working under a certain stream, you're not going to be getting access to a lot of the information, especially in the model building world. A lot of it is new. I'll give some points to that. And I'll tell you a personal experience. So I'm currently like I was pursuing higher education at a local university. And in the university, it's a pretty big university in Canada. And there was a course literally around or financial markets and making models for that, mathematical models. And the entire course was limited because the professor would have to review your entire academic CV and would deny you or grant you entry into the course based on his judgment. If he approves of your academic achievement enough to even get you access to some of the information that he's working on. So, I mean, it gets really, really deep, the rabbit hole, I would say, of information. Now, that is not to say that financial information is not available on the internet, and that's not available also like through textbooks and whatnot. But it is definitely, definitely, definitely intentional. It seems that it's not taught in the mainstream, and it's not brought up more in discussions around the world. I think my
Yeah.
yeah, go
Yeah.
ahead.
No, go on, go on.
Now, I
Finish
think
your
my
thought.
second take here, and this is like I think in my opinion the most horrifying take, is that I think there's we're losing what a middle tier job is. Now, I think we can all agree what low skill labor is. We can probably all agree what high skill labor is, like a CEO or a corporate position, or like a board member position, and so forth. Like these are all desirable jobs, or somebody even say like like those quant fine analysts, like with those multi-million-dollar salaries. Those are all desirable jobs. But it seems to me that what's shrinking is the middle tier jobs. Like for example, a banker. A banker used to be a middle tier job. So if you're a banker, the CEO would probably make 5, 10 times your money, and you're just like a middle tier management, not even like upper tier management, just middle tier management at a big company. And so the gap was just 5 times, 10 times at most. Today, if you're a manager and you're probably making 100,000, 150, 200K in North America, probably 100,000, I would guess, maybe 150. You're a middle tier manager, well, you're making 50, 100, maybe even 200 times less than the top dog, the CEO. And so I feel like what's really shrinking here is the middle tier position. Because while the ratio between the lower skill employee and the middle tier employee, I think that income ratio has stayed about the same, maybe slightly widened. I think the ratio from middle tier to upper tier has just been widened quite exponentially.
Yeah, like on that comment, I do, like humorously joke about the fact that the ratio between the lowest and the highest earner, the reason why it doesn't matter anymore is because the number is so big. The difference between, 100,000 versus 200,000, and I know these are exaggeration numbers, right? If that ratio was like that, it still would mean not much to the lowest earner because they still would be screwed
Yeah.
in that,
Yeah.
right? Like it just matters that little. If you compare your average, I don't know. Let me give you a job. Like maybe you're a waiter or something, right? The lowest earner, and you're making minimum wage, if not livable wage, because let's say you're in the U.S. and you only get paid in tips.
Hmm.
If you compare that to the owner of that restaurant, the CEO of that restaurant, does it really matter if that CEO just doubles their salary from like 20 million to 40 million bonuses? Not really, especially if your wage is already not livable. So like, at that point, the ratio is so unfathomably broken that reducing it even by a little doesn't make a difference anymore. It does require radical change. And that radical change usually means you go from a low paying position to a middle position, which is already, as you see, starts is currently shrinking, right?
Hmm.
And I think over time, and this is my personal belief, AI will definitely make it worse because
Yeah.
it will start removing, how do I phrase this? Jobs that are white collar in nature that require, some level of like cognitive performance
Hmm.
that can be done by an AI, and the job was only created because it needed to fulfill employment quotas. Now, now, what
Yeah.
does that mean, right? Like it's hard to describe this. The way I want to look at this is that there are companies, and there are a lot of big companies who will create jobs because they want to fulfill certain missions. So maybe they want DEI hiring. Maybe they want to hire more HR because it makes them look better, right? They want to add more bloat into the system. They
Yeah.
want to just add headcount for the sake of adding headcount. Those jobs aren't necessary. You can easily remove them and automate them using machine and AI because they can be done through information technology. They can be done without being paid. And they can certainly be done because by cutting headcount, you fulfill your missions, but also you increase the bonus packages of the executives who are in charge of cutting costs. So there's a lot of risk now where the biggest sponge of employment that literally sucks up all the excess labor in the labor force. It's the sponge is being removed now, and I don't know what's going to replace that. Maybe universal basic income, like
Surely.
UBI or something.
As I mean that would be nice, but I don't see that happening the next
Yeah,
15 years, unfortunately, 10 years.
exactly,
Yeah.
right. And I just want to add that's sarcasm, right? Like UBI would not cover
No,
the living
it'll be like
expenses of millions of people.
no, it'd just be like probably like at most 1,000 a month. There's no way the government will shell out any more money.
Yeah, sure, yeah, like 1,000 a month, right? But even then, like, what are you proposing? You either propose the highest tax hikes in history,
Yeah.
or you have the highest unprecedented, you know, like balls deep type of deficit spending on the government forever,
Well,
and you need to justify that
okay,
to
but
the
let's be honest.
bondholders.
Let's be honest. Does the government really run the government? Okay, so like, okay, let's talk about like high like the what would happen if the Democrats won the election, as opposed to the Republicans. Would things have been that much different? The answer is like in the grand scheme, no, because sure the Democrats might have not done the crazy things that Donald Trump has done, like messing with everyone, but at the end of the day, all policy making, not all, but a lot of policy making, it all supports a certain class of people. And that class ends up being the ultra elite. And why does it support the ultra elite? Because, well, these are the people who stand behind the politicians, who are willing to donate and platform them, and then they form nice lobbies where they have discussions. And what do you think happened to discussions? So
Yeah.
I feel like, and I think this feeling has been there in America for a little while. For the last like 10, 15 years, it didn't matter who won the election. It just felt bad either way. Because you knew that if Democrats won or Republican won, like the people benefit, sure, but do they benefit proportionally as much as the ultra elite? And the answer is no.
Yeah. Exactly.
And
Right.
to
And
yeah.
yeah. No. Go on. Go
No, I
on.
was gonna say
Finish your
like
thought.
it's just such a, like a very like I think that there's a reason why so many people are so apathetic and like the youth are so,
Yeah.
like just kind of giving up. I don't say giving up. That's a bit too strong, but like they don't care as much because either
They don't have skin
way
in the game,
they feel like it's
right?
going the same direction.
Yeah. Yeah. And not only that. The thing I want to add is that they don't have any skin in the game.
Hmm.
When you have stake in the system, you actually give a shit about it, right? You actually care if the system burns down and you have something to lose,
Hmm.
right? I've read a funny quote before. What's the best way to stop a person from protesting? Make sure you give them a car, because they will not let their car be the first victim in the protest, right? They
Yeah,
just won't.
yeah.
So what I'm trying to say is that, and this kind of ties back to what our whole podcast is about. It's about providing people information, and hopefully, in the ideal way, you use that information to get invested in the markets. But through doing that, you become invested in whatever system your leaders are trying to uphold, right?
Not
At
like
the
a bad thing, that to be honest, but it's okay. I would say a necessary evil. You can argue.
Yeah, no, like, okay, there's a lot of history behind on why I made this statement, right?
Hmm.
And we always get this down, like, in the future or even later on, depending how long this is going to go. But essentially, right, it is important for us to recognize that right now you're just one person. You can't revolutionize the system. Like, you can't just stop working and then go full on communist and just break the system. It's not going to work that way. And I think that it would be terrible if it worked that way, right?
Hmm.
But what you can realistically do is control your own financial situation, so that even if you're getting screwed by the elites, at least some part of you benefits from some of their policies, right? You want, okay, like, if you want to benefit from giant unfair tax cuts to the rich, well, guess what? Capital gains tax is always one of those little taxes that gets modified every now and then, especially by the conservative party or by the rich party, because their buddies all own equities.
Hmm.
So what do? You own equities. You don't have to own a billion or something like that, but just own enough so that it makes a feasible difference when they pass policies that benefit the so and so rich, right?
Hmm.
Now, is this pretentious to say? Because some listeners may be the average person. I don't think so, because I also consider myself one of those people who don't have $1 million in my account, right?
Hmm.
Like I have a lot of student loans. I have to repay that stuff back, and every day or every year, every month, I get shafted by the next interest payment because I have to make ends meet, right? So I understand what it's like to not be on the winning team, but if your answer to me is let's just sit on the losing team and do nothing about it and just be apathetic, I think there's a better solution to that. Like, we need to do something more proactive.
Yeah.
And this is all about, getting invested and using something to help protect your emotions when you're doing this. And that's actually the whole point of why we are talking right now, right?
Hmm.
But yeah, like going back to what you were saying, I do think that there is a lot of, how do I say this, like, turbulent change that's happening. I don't necessarily agree with whoever's in charge. Everyone is they're all moving to the same direction, which is like reckless spending. You're either spending too much
Hmm.
or you're not collecting enough because you're cutting the taxes so that your friends can, give less to the government. They're all moving in the same direction. Am I worried about the U.S. debt? Somewhat, a little bit. Not the amount. I don't really care that it's 37 trillion
Yeah.
in debt because the GDP itself is roughly like 31 trillion. So it's basically in the same ballpark. I'm not super worried about that. But what I'm worried about though is the pace because if you told me it'll go from 37 to maybe 50 trillion in the next 8 years, I'm not gonna bat too much of an eye because that's like only $13 trillion, which is
Yeah.
ridiculous when you say it out loud, right?
Yeah. Yeah. But yeah.
Only $13 trillion, right? And the GDP will probably grow somewhere around that ballpark. But if you told me right now, oh, by the way, it's like GDP is gonna go, like the debt will go from 37 to $80 trillion in 8 years, but the GDP is gonna be 50. Now I'm gonna be alarmed, right?
Yeah.
Because something's not making sense, and that's exactly the direction that we're seeing right now because we have a lot of spending issues regarding like Social Security, Medicare, Medicaid that unfortunately does need to be reformed. The government was very irresponsible in not planning ahead on how to make these programs actually financially sustainable. So they have to start hurting people in order to align the reality with their budget, right? Because their budget cannot support this unless they're willing to hike taxes on everyone, including the middle class and including the average person.
Mm.
Everyone's going to have to pay for the poor long-term thinking of these governments. And that actually moves our topic to the bond market.
Yes, sir.
Okay, so have you been paying attention to how the U.S. has been performing over the last couple months?
I have not been, but I have been sometimes eyeing TMF.
Eyeing TMF, right?
Yep. Yep.
Yeah,
Yep.
TMF is hilarious. One of our friends basically always invests in TMF whenever it's time to rise, but then it never actually works out well because TMF just continues to disappoint,
Yeah, for
which
those
is
who
very
don't
important.
know, TMF is the levered ETF of the
Yeah.
20-year Treasury bond.
Yes, that's right. That's right. So it is the 20 year Treasury bond, and it is based on, I think it's based on TLT, right? That's the underlying. I'm pretty sure
Yeah,
that's what
yeah,
it is.
yeah, yeah.
I don't know why I had to ask the firm because I've been trading this thing like all the time. But yeah, yeah, TLT is basically the underlying, and we look at TLT because it is a proxy on how the markets regard the U.S. debt and the U.S. financial system. Anytime there's like bad things that happens, even if it happens in the U.S., bonds really rip because everyone flocks to bonds and they just buy the crap out of it, and that lowers yields. And unfortunately, over the last couple months, we've seen a pattern break, right? Like usually when bad things happen again in the U.S., bonds go up.
Yeah,
But this time around, that didn't happen. It actually went more down. It went
yeah.
down even more.
Hmm.
Yeah, it went down significantly. And if anyone here were to search up the treasury yields on the 30 year or even on 10 year, they spiked dramatically. And it's mainly because of inflationary fears and also due to political uncertainty because the markets have less confidence in the US government, and a lot of foreign investors were dumping US dollars and US assets in order to repatriate that capital back to their own countries because they were not sure whether or not Trump would actually do anything drastic like capital controls or something along that line.
Yeah, for those who don't know, the idea of a bond is that the government needs your money now, and that the
Yeah,
government will pay your money back in the future. And the 20-year bond means they'll pay you back in 20 years, and so on and
right.
so forth. So the idea
Yeah,
here is that, well, the bond rates, they basically talk about how much confidence you have in the government paying you back. And the
Yes.
fact that it's been going down and down is the reason why we're saying, like the current political unrest and
Yeah.
the markets, the people are kind of slowly flocking away from the US to
Right.
convert to their own currency.
Right. That's exactly right. If you're still confused by that, just Google it or ask ChatGPT. Like
it's
ChatGPT will explain it to you.
it's better these days. Chat GPT.
Yeah, it is. It is better to say. Like I literally learn a lot of my content just from ChatGPT.
Mm-hmm.
Yeah, but yeah, like just going back to the bond market, um, the Trump put, which is basically a term used to describe how Trump will backstop the markets all the time, anytime shit goes in the red. He's been doing that with the bond yields too. Every time the yields hit like 5% on the 30 year, he'll say something in order to bring the yields down. It's so strange. Like I'm not sure if he keeps up on the yields and then he does this because he's scared the U.S. government will become insolvent or something. But he will always say something in order to cool the markets down and deliver more confidence and reduce inflationary fears. The first couple times that were done, he did it by extending the tariffs by 90 days. And then he did it again by talking about how he's negotiating with China and he's ready to open talks and reduce tariffs and yada yada. And that coincided with the bond yields topping and coming back down.
Yep. Yeah, that's exactly right.
It,
Yeah.
it's ridiculous on what he's doing. Like I think if Biden did this or hell even if Obama did this, I think someone would have tried to arrest
Impeach
him at
them.
this point.
Yeah.
Yeah, impeach them, right? But say what you will about Trump, but he is very, unfortunately, very market orientated, and he's very aware of what to say in order to make sure everything's in fine balance. So my biggest concern here is when are bonds investable? I have no clue when that will happen. Like I actually have no idea. I think the conditions that need to be met are very poorly defined, and even markets don't know when the bonds are investable. Like no one wants them. Just look at TLT. No one wants this. It's it's a piece of crap right now. It's chopping and it just goes up and down, up and down. If you're holding TMF, which is like a leverage one, you're gonna be eaten by the volatility decay.
Yeah.
So God help you if you've been trading that.
I mean,
Like you
it
should
sucks.
probably
It sucks to say, but I think honestly, if you're looking at like the traditional assets, I think gold is your best bet. Cause
yeah
yeah, cause like gold, ever
yeah
since like well, obviously it didn't do too well in November when Trump was in charge, but like when he first got elected. But
yeah
since the chaos that's been begun in January 2025, it's been on the up and up and up. And like gold is an asset that does well when things
yeah
are not looking so well for the world. And the idea
yeah
is that, well, if you have nothing, you have gold and you can defend your gold, and that's why the value can
yeah.
stay up. So,
I know it's actually so funny.
yeah.
Like I've always looked down on gold because it's a bag of rocks that literally give you no yield. It gives you no yield. Like it has no interest rate. You can't make money from it just by holding it. You have to pray that some other guy is willing to buy it off of you at a price higher than that you first bought it at, right?
Okay,
And
I have a fun example for you. Okay, I mean, like just
yeah,
to say that out loud. Um,
sure.
I have a favorite quote. There's this guy who I watch just for the memes. He says that here's why people hoard gold. If tomorrow the bank shuts down, and for something the bank shuts down, the internet goes down, we lose technology, etc., all your assets are frozen. And well, what can you have in your asset that's not frozen? Gold. Because in a world where currency is gone, for whatever reason the US dissolves, no one accepts US currency, or if you're in a different country, no one accepts your local currency, what will they accept? They'll accept gold. And at the end of the day, if you have gold in your house, in your backyard, in your lawn, it's your money. It's your money, and as long as you can defend it, you have value to yourself. But all these currencies in your pocket, if for some reason some people lose faith in the currency, well, that currency is useless. And that's why when that's why the doomers love the gold. When when the world is looking all doom and gloom, gold always does well
So
for
my
that reason.
question So my question to the person who made this quote is this: so your U.S. dollars are now worthless.
Mm-hmm.
Your any other fiat currency is worthless.
Mm-hmm.
You have no food
Mm-hmm.
because the Costco shelves are barren.
Mm-hmm.
Your water, there's no water. What are you gonna do with the gold?
So you see, this quote was made by an American, and the American said, "I'm gonna walk into the grocery store with a shotgun."
That's funny.
So take this value for what you will, but I think the underlying merit is true. That the gold has value because it's something that can be defended.
Yeah, yeah. The gold has value when civilization still is still like maintained, right?
Mm-hmm.
But short of civilization is breaking down itself, I'm pretty sure people won't care whether or not you how many gold you have. People will start going back to the basics and will start trading using corn and other commodities or whatever is available, whatever is edible.
Listen, man, even in like the 700s, 600s, like after the collapse of the Roman Empire and all that, gold was a hot commodity even in Europe. I'm just saying.
Yeah, because civilization still existed though. Like yeah, the Roman Empire collapsed, but there are still communities that
Mm-hmm.
that still existed, right? When we say collapse, it's not like everyone just died in a nuclear apocalypse. Like it just meant that the government fell due to corruption and civil war, right?
Mm-hmm.
But you still had rulers and warlords who still owned the place, so they had some sense of order, and I think that's where gold exists. But if you told me, oh, by the ways, if you are in Fallout 4,
Oh yeah, then nobody
right?
cares. Nobody cares.
Yeah, no one cares, right? No one
Yeah.
cares, bro. We want clean water to drink. We don't care whether or not you have you have, you have like a element with letter AU on it that you can trade. Like no one gives a shit about that. So
But come
that's
on, it's so soft. The soft metal, it conducts electricity so well. Surely
it's
that has value. Come on.
yeah, no, that's just like stupid, right? And I always think about this whenever I hear about the gold bugs, like Peter Schiff, who talk about just buy gold because America's gonna collapse. And in my mind, like that's the stupidest thing you can ever hear because you're basically telling me that gold can be traded for water and like
Well,
more.
no. Gold can be traded as a ticket out of the collapsed America into literally anywhere else. And they can convert your gold for the currency there. Easy
As
click.
long yeah, as long as those countries still exist and they're still willing to accept gold.
They will. And
As long
as long as they exist, I think people will stick to gold. As long
yeah.
as somewhere
Yeah. Their
civilization
civilization.
exists, they'll
Yeah.
take gold. Yeah.
Yeah. And that basically means that as long as there's a place where things are still in good order, such as money is still something people agree to trade with,
Mm-hmm.
then yes,
Okay,
gold will work.
let's be honest. Let's be
Otherwise,
honest. If the world goes into some war, right? What's the
yeah.
country do you think that they'll survive? I think Argentina has no enemies per se. They'll just survive. Who cares?
Yeah. I don't think Argentina will blow up. Maybe it might blow itself up because it
Of
has a
the
competent leader.
civil wars and whatnot, etc. But like, or like I don't know what's
Yeah,
happening
no,
in this
but
situation
the
there.
leaders are actually grossing. Their leaders are grossly competent. Like they have one of the highest inflation in the world. Like if you're not counting for Zimbabwe or Venezuela, right? Like
Yeah, yeah.
Argentina is one of those places where if you're a billionaire, you barely are able to buy a loaf of bread. It's crazy over
Damn.
there. Yeah, but yeah, is it time for us to wrap it up? I think it's gone pretty long, eh?
Yeah, it's gone pretty long. Do you want to talk about like before we wrap it up? Do you want to talk about the other things like utilities and volatility and how's that been going?
Yeah, sure. And then if we can't get through all of it, we can always just
Mm-hmm.
talk about it another time. But yeah, like something that I think it's important to bring up, in case anyone is wondering, is what do you do when the markets are kind of not doing super hot because of uncertainty, and you want to put your assets, your cash into something investable, like something reliable. Utilities and consumer staples are sectors that I would recommend. Like when I recommend, I mean this is something that I put myself into as well, and this is what I trade with because if you think about it, utilities are the things that you use every day, such as electricity, water, heating, all that fun stuff. right? Telecoms, even like Wi-Fi and phone bills. So even when the world isn't doing super great, you still need like a running water. You still need electricity to light up your room, right? If you're living in a first world country, that is, or in countries with infrastructure. But make no mistake, they're important companies and they have bargaining power because you either choose to pay the new inflated rates or you choose to not have power. You choose, right? You will end up agreeing to the utility company. And that's one of those sectors where they have a lot of inflation hedge when inflation rips or when the market isn't doing great because people are getting laid off. Because it's something called inelastic demand, right? Like the amount of demand for these goods will always remain around the same amount because people can't say no to not having water. The other thing that I want to bring up is consumer staples. So you're talking about your local, I don't know, toothpaste company or your toothbrush company or your uh, fruit company, like companies that sell you things that humans need in order to survive. Those companies can also do pretty great. Walmart is one of them. Walmart tends to sell really cheap goods that people need, like clothes, and I don't know, like other things, right? And
Groceries,
then
like just livable things. Yeah, yeah.
yeah, yeah, or even like medication,
Right.
right?
Yeah,
Like
yeah.
even like meat, like retail medication stuff, like companies like that, they do really good. Amazon, funny enough, even though it's a risk-on asset, it's tech basic, like it's tech based. It's also consumer staples in some ways because it has replaced a lot of consumer companies, and it's taking on the role of basically selling anything that people need and want. And it also has a potential growth rate too. So Amazon's kind of one of those companies.
Mhm.
But you're also looking at other more purely defensives, like such as healthcare. Healthcare has not been doing so good lately, but that's not because healthcare is doing anything wrong. More so, what Trump is trying to do. So I don't really want to get into that right now. That's more
Mhm.
like a next podcast kind of thing.
Yeah.
But healthcare tends to do pretty well as well because people need their insulin shots, people need their medications, and the government generally finances these things, especially when you're living in other countries like Canada or I don't know, give me another country like countries in Europe, right?
Uh-huh.
They have strong financial support to make sure that the people there have access to medication, and those companies who collect that money, well, they do pretty well too, even during times of turmoil and recession. So those are certain sectors that I think are super important when times aren't so great. And if you don't want to hold cash, you want to hold something. I would recommend researching into these topics.
Yeah. I think like in general, when we invest, we should look at like as we do like a binary flow kind of thing, like a flow chart kind of thing, where if the markets are doing well, there seems to be money in the markets called liquidity, market liquidity. Then we like to be in riskier assets like Nasdaq, Bitcoin, or maybe Bitcoin if you're really feeling strong about it.
Mm.
And when times are tougher, when obviously there's less liquidity in the market, or we're less certain about the market direction in the short term, then we tend to look towards the staples, the things that are
Yeah.
guaranteed to be there. So like utilities, healthcare, and bonds. And that's kind of the end goal that too. So it's like kind of the old money versus new money, where new money tends to do well and when situation is set up for it, and when
Right.
it's not, then you have to stay stable with the
Yeah.
quote unquote old money.
Correct. Yes. Exactly. That's a really good way to simplify this topic. And do you want to talk about volatility today, or you
I
want to talk about it
think
next time?
let's leave it there, and then maybe we
Okay.
can make a note of it somewhere. I think we're
Sounds
just
good.
I'm looking at our podcast time, 1 hour 29 minutes. So
Wow. Wow.
yeah,
Yeah. So it's probably gonna be our longest one, actually. I think in the future we might make more shorter ones, just
really
because.
okay, that's fair.
Well, I think there's a lot of content that takes time to be digested.
That's true.
We can make it like around this length, provided that it extends beyond this finance, something something less like technical
Mm-hmm.
based. Just because I think there's a lot of audience who may want to take time to listen to this content and actually absorb it. You don't want to, I think, overwhelm them by having a 2 hour like or 1.5 hour podcast. This is more of, I think, a test trial run in terms of just seeing how we want to go through these things, and
Mm-hmm.
also give everyone a big summary of what we do and what our plans are. Right now, if any new listeners in the future want to get in on this, do I expect you to go to podcast zero and watch this? No, absolutely not. We're definitely going to rehash some of this as
Yeah.
if we're talking to new people, and hopefully, yeah, in the future, people will be able to use this information and do what they want with it.
Yeah, maybe probably even like depending on the demand, like a full
Yeah,
podcast going over all the basics from zero to
absolutely.
hero.
Absolutely right. Exactly right. So that is months or even years ahead of us.
Mm-hmm.
Depending on the traction that we get. But this is what we're going to be doing.
Yeah.
And whoever tuned in, appreciate you guys.
Thank you for your time.
And yeah, we'll see you next time.
Yeah.
Okay.
Peace.
All right. Yeah. Peace.